Hello guys. I see that I start doing the streaming, so hope you are all there. I don't see anyone right now. It seems like there is no person, but I will be waiting for some time. Sorry to be delayed, for technical reasons. Hello, wise man. You are the first. Although I see the watching, there is 0. So it's funny. There is someone. I am just late a little bit for technical reasons, so I will be waiting for a few minutes and to see the guys coming. Hello, Matt Burley. How are you? So I see right now three people watching. Hey, Nas Delanochi, how are you? Bonsoir, monsieur. So I am a little late, but it's okay. It's still night. We have that long time to speak. Hello, Artikov. How are you? So I begin to see my followers. Hey, Chris Johnson, how are you? So there are 7 people here. One is hiding, and the others they write something on the chat. Hey, Matt Burley, how are you? Welcome, man. I have been just a little late for technical reasons, and I try to fix everything before we begin. That's why it's always hard with this softwares and this stuff. Okay, especially. Oh, James, how are you, James? Numbers, a different room. Yes, I changed the place like 2 weeks ago. Hi, Chu Dank, how are you? I will fix the background, and I will begin making whiteboard videos. So expect some change, not big change, but some change. Hello, John Wesley. So expect some changes, especially the background. I don't want. I want people to focus on what I say. Some people, in our chat, it's very good because I am with you, and most of the time, they ask questions and they get answers, and it's very good. But for some other people, they get distracted. That's why I want to change everything. So we have, hey, Vincent, good evening, everyone. Good night. I see that there are 10 watching. Hey, Empty Mind. I'm getting all my friends here. Oh, you said, have you sold your Facebook stock yet? No, at this time, I wasn't in Facebook because I was in other stocks. Okay? And since I was in other stocks, I can't sell what I have in order to go to Facebook. Okay? So it's something related to timing and to money. Because as I told you before, all my money is in the market. So I don't leave some money waiting for 2 weeks or 3 weeks until I find the trade. No. Whenever I need a stock, I just go search. If I don't find today, I will search for tomorrow and I will buy a stock. So I don't wait. So I didn't buy Facebook which has a good gap up. You are getting six, but I understand, Vincent. Although you are making money, but it's good. Thank you very much for making 6% of the money, but understand that we are speaking about risk today. I will explain to you that it is too much risk to be an earning date. You can make money, but you can lose money. So understand the risk before you do the trade. I see even can go till 78, which was its early high, so we can hold. No, John Wesley, you will never know where Facebook were going or was going. At first, when the IPO of Facebook, all the analysts, it opens at 42, it goes to, I think, to 48, 45, and then the same day it goes to 38. After that, for 6 months, it was going down, and all the analysts say, sell Facebook, sell Facebook. I am maybe the only one who I said buy Facebook at that time, okay? And when Facebook goes to 1755 in 2012, I think in December or something like that, and the next day, this is the low, 1755. And then after that, when it was 1999, next day, I bought it. And when it was like 25, I told people to buy, okay, because I see a big move. Now, from that time to now, from that time when it was 25, I said that Facebook will be $100. So all the people, you can go to my video and you can see that most of the people, they don't believe. They don't believe. Why? For me, I wasn't predicting like other people. I speculate. I see a move and I speculate, which is different from predicting. Anyone can predict. If I ask you, what will be Facebook in 6 months or 1 year, you can tell me any number. This is predicting, but because you don't know nothing, you just see the price and you just give a number. But speculating, it means you have some basis of technical analysis, or because of fundamentals, or because of whatever thing, you have something to see in the chart or something like that. For me, it was the chart. Now, when it was 100, I make a video. I make many videos when I traded Facebook for many years. From 2012, I have traded a lot Facebook. Whenever there is a move, I am in it most of the time, because I'm not saying I was an expert in it, but it's just because I traded a lot Facebook. And when it reaches $100, I say it will be going to 150. It takes time, okay? It takes time. This is the only this year which it goes from 115 to 174 or 73, okay? This, for what I do, is different from what other people do, okay? So what the other people do are doing investing. So for me, when I say buy, it's just for the trend, okay? So when the trend ends, I am out of it. So try to understand. I am just for the trend. I am not investing, and this is a big thing about understanding the difference between trading, to understand the difference. Swing trader, and here is when we speak about our subject, which is risk. In our trades, we don't risk that much. And this is what makes us better than anyone else, than day traders or than their investors. Okay? You only go with a trade when there is a trend. When the stock is not trending or zigzagging or going down, we are not going to buy, except when it reaches a support line. It means when it reaches something solid that we can buy from the bottom, and it can go up higher and higher. And this what I teach you guys always. Now, Vincent, if you are going to buy or to sell, it doesn't matter. As you might know, I have explained my strategies a lot, and a lot of people, they know what I should do in this situation. And those people who already got my training, they know if they want to enter to any stock, they know when to enter and when not to enter to a stock. Okay, so please check my training to get a full answer about that. Hello, just for Tube. It's very good today. I got all my followers that always follow me, and I see almost. Hey, Mr. Mash, I didn't see you. Most of the IDs that I see on YouTube, and they go to the chat, most of them are here, so thank you very much. There are some others who are missing, but maybe they come later. So, as I speak about risk, an investor, let's say you buy Facebook when it was 45 at the beginning, just when Facebook began, at the beginning of the day, as an IPO. When it get to let's say he was buying, or he bought, let's say 100 shares. Okay, the stock was, at the end of the day, it was $38. But after 6 months, he will be losing half of his money. Now you tell me right now, you tell me now, oh, Facebook now is 170. No, yes, it is now, but at that time, people, they don't believe. You don't believe that it will be 100 or 170 or whatever. You don't believe, and this is the problem. And no one knows. It means you, when you see Facebook right now 170, okay, you say it was 1755. But when you bought it at the beginning, and you see your stock sinking, because Facebook, for true, it was sinking, and there are some short trend up, like a reverse or reversal. I was there in the reversal. So, but when it hits the bottom, I just bought. Now you tell me, for example, what if it was not the bottom, and Facebook will still continue to go down? Because I see some analysts at that time, because I was astonished why the people are against Facebook. Although I see sometimes some good moves and you can make money, but I understand those analysts were asking people to sell. That's why a lot of people sell when it's going down, and was selling, and why they are asking you to sell. This is the tricky thing that you should know. Hello, Ammar Alurani, how are you? How long do you wait to trade in IPO stock for beginners? 6 months? Oh, no. For me, it doesn't matter if it is IPO or not. I just trade it. Okay, this is the answer for the question of Vincent. He said, how long do you wait to trade an IPO stock for beginners? Is it 6 months or 1 year? No. Most of the time, I check when we have enough candlesticks to get a signal. Now, when I get a signal, I buy if I want to. Okay? But there are thousands of I shouldn't be waiting for an IPO to do so. Thank you very much, Ammar. You said for me the one big risk with swing trading is if there is a big gap up and maybe for any reason. Now see, a gap down is just sometimes we have bad news. Now this you can't avoid, even if it is not earnings. Sometimes a stock got a gap down. It means the stock go down too much. Okay, it's not because of earnings. It's because of something else. Okay, the company has problems, or the company want to sell something and it doesn't work well, or there are bad news about the executives, or it means it is something that makes the gap down. It means the gap down. What is it? It is just traders respond to some bad news about the company, so they go and they short the stock. That's it. What do you mean by gap down? It is just the traders who do this. It's not an investors. Okay? Sometimes it is a mutual fund who sell this stock. Okay? I understand that. He has maybe 1 million or 5 million shares to sell, and one day he just sold them. That's why you see gap down. Okay, if he wants to get rid of this stock and buy another stock. So understand that the news are always there. Okay, so don't be confused always looking at the earnings, because there are thousands of stocks, they don't respond to the news, either good or bad. You see the stock doesn't do nothing. Why is that? It is just because there are not enough traders and they don't short that stock that much. That's why there is no gap up and gap down. But famous stocks that all the people know them and they are traded a lot, like Twitter, like Facebook, Apple, Google, and the other big stocks, they have a lot of traders who are waiting for the news. And this is it. You say the earlier high was 175.49. It doesn't matter where Facebook goes. It doesn't matter. The matter is that some people, they get a gap up and they make money. That's the good thing. Hello JJ, how are you? You are late about 18 minutes. That's very good. You say hello Kareem, thank you for your trading criteria. Last year I lost 30% of my money. Since I start following you, my account is very green year to date. Thank you very much, JJ. You will see, because you begin to understand risk. That's why you change from losing money to making money. And the second thing is that you begin to understand risk. Okay, that whenever you put your money into the market, you understand that there is a risk. It's not a game. It is not a safe game. Okay, there is always something that will happen to the stock, either good or bad. Ammar say, I have a question for you, Kareem. What do you prefer when trading? Fundamental? Oh, Ammar, what are you saying, man? Fundamental over technical? No, I don't do fundamental. I have never believed in fundamental of the company. We don't do fundamental here. We do just the price. Okay? Facebook, when it was going up, I entered because of the price, not because of Facebook. And even Twitter, I sometimes enter and in a gap up or in a trend, when I enter, it's just for money, for price. That's why my strategies are based on price only. Okay, so understand that. We don't do fundamentals, and even in technical analysis, I don't do indicators and moving averages. I don't use them. I don't use moving like a volume also. I don't trade it. All what you see the people are using, I don't use. Okay, so if you want Ammar to join us, you will have a different opinion about the market, and you will be maybe making money in the future than looking at the company fundamentals. Because I will tell you, Ammar, something that you don't know about the market. Who gives you the information about the company? Ask. This is my question to Ammar and to all the people who know the market. Who gives the information to the market about the company? It is the company itself. So the company can lie because they are people. They are protecting their stock, protecting their company from bad news and bad talk. Because if analysts begin to say, oh, that company is bad, the stock will go down and they lose a lot of money from the stock. That's why I told you always, avoid what the people say about the stock. Okay? If the stock is going up, I will see it by myself, using my criteria that I use in order to get a signal. If you are interested, you can join us and you can learn more about this. You can't rely on news or earnings evening. If earnings is good, the stock can go down. Yes, Vincent, as he says, you can't rely on the news or earning evening, even if the earning is good. Sometimes I see it in Facebook. I was in Facebook one time. The earnings are good. I see some money, but in the morning, I see that all this money that I get is lost, and the stock is trading normally. I don't lose that much, but still, I didn't get the gap up, although the news were good. So you see that? So it's not always that good. It means that you make money. Sometimes it is good, but you lose money. Hey, Ammar Al-Urani, you said I use technical, price action, volume, spread analysis. No, I don't use anything from those except for price. I use resistance line, support line. I use other criteria that makes me buy the stock. Okay? So I don't use technical analysis in general, like indicators, moving averages, and volume. I don't use it. Volume for me is just to check if the bid and the ask are wide or not, and if there are a lot of traders in this stock, yes or no. But I'm not using volume to enter a stock or to buy a stock. No, never. Okay. You say, John Wesley, you say, isn't blind trade if we don't see technical indicators, market? No. Technical indicators, what are they? They are strategies of other traders. They have done before. They lose money and then publish them in books. Okay? Okay, if you go to a chart and you want to use technical analysis, how many indicators you find? For example, in Interactive Brokers, you have more than 300 indicators. Which the indicator are using? Are you using 300 indicators to trade? And the market doesn't follow indicators. The market is run by people. Okay? Is run by people. So for me, how do I know to enter? My criteria is based on the price, because it is the outcome of the traders, what they do. I don't care what the people say. I care what the people do. That's why in English proverb that says, actions speak louder than words. When you go online, okay, either you see the news or analysts speaking, or when you use the technical analysis is the same, because technical analysis is an old information you can't use for the future. Okay, and it is something that you can change, so it's not valid for me. That's why I told you at the beginning, when I was young, I began to use MACD and to use RSI and to use this stuff, but I find that when I discover my strategy, I discover that they are nothing than lagging information. They don't help me at all. Now, if you use them and they help you, it's okay for you, but for me, no. And for what I teach, no, I don't use them. So this is something. JJ, you say, since I'm doing good in my trading, my friend wants to give me money to trade for him. Should I do it for him, Kareem? He is willing to lose 10% of his money. See, JJ, you are asking something which is private. It's not related to this. So for me, I can't give you any advice. My opinion is don't trade to anyone, because let's say you put some money in a stock and you got 50%, what you could call gap down. Okay, you put his money into a stock. Let's say you just put it, and after the earnings or after just any news, not just earning news, let's say you lose 50% of his money, and he will tell you just 10% and you lose him 50%. So you should give him all his money. And believe me, don't play this game. Okay, don't play this game and do stuff for other people. Okay, so you can tell him, okay, Kareem is teaching how to trade well. You should study and learn by yourself, because this is something for the future. And this thing that you do, JJ, what you are doing, it's your problem. You are going to illegal things, because you should sign papers, you should do a lot of stuff. And or you can, I will tell you something, maybe you can do partnership with him and you put all your money and his money into and you trade for 1 year or two, and if you make money, you ask him money from that. But try to see, it's very difficult. Okay, it's very difficult. And since you are doing good, try to make your money better and better. Try to focus on yourself, make more and more money. And for other people, it's your choice, because if they lose more than 10%, they will charge you to give them more money, or to give them all their money because you lied to them. And it's very tricky to do business for others. It's very tricky. It needs, if it is a big money, you should go to maybe to a lawyer and to put papers and to put stuff. But for me, if I want to help others, I should be like partnership, which is an account in a broker where everyone puts the money, maybe equal money, and someone is trading for them, and they agree, they put like an agreement that they will let him trade, and they look only into the account. They can't touch any trade, they can't sell, they can't buy, they can do nothing. Or you can play together. You put all your money together and you can play with it, which is very good when you are. But for my own experience, it's a very risky business. So you shouldn't do other people's business. Okay, this is what I say, Jay. If you have a JJ, if you want if you want more discussion about this private question, JJ, please send me an information and we can talk this privately, because it's something private. It's not for all the people. Hello, Steve Gosson. How are you? Sorry, I just see your name. And Bikes Night. Hello, Bikes Night. Please, hello, Steve Cunningham. Ethan Flory, Loot Strat. Sorry for that. I was speaking to Ammar about about JJ, and but I have a lot of questions. I see a lot of questions. So please, I will go through the questions very quick. Chris Johnson asks a question. So what do you think about value investing? Okay. Value investing is based on stocks that give dividends. Okay. And there is another stocks that is based on growth, like Facebook. It doesn't give dividend. This is the difference. Now, it depends on your money, because if stocks give dividend, you should have a lot of money into those stocks to make a living. Okay, I will give you an example to understand what I mean. Let's say you bought value stocks that give dividends, okay, and they give each year 5%. Now, what is your objective? 5%. Okay, each year you find 5% as profit, whether they go up or they go down. Now, 5% from 100,000, what is it? It is $5,000. So, this is what you get. $5,000 out of $100,000 you put in the market. Now, if these stocks go up, you will make more percentage. You will make 7, 10, 15% because of the dividend and because of the capital raise that the stock have. Now, if you use stocks that are called growth, now what does it mean? It means they don't give dividend. If they go up, you make money. If they go down, you lose money. Now, sometimes most of the people, or the old people who have a lot of money, they use value. Why? Because they are interested to get dividend. They are not interested to get the whole going up so quick. But if you don't have, you should have at least $1 million in order to get, let's say you get 5%, in order to get $50,000. This, if you have $1 million, if you are looking to get good money from investing in value stocks. So you should make a plan and understand this. If you are interested, you can go to my training level. I think it's level 16, which is how to invest using dividend stocks. Please go to that training, either in videos or in books, and study it. It will give you a lot of things about value, about risk, about value investing, those who give dividend, about growth stocks. All this, it's explained into details. Even a tax. Some stocks are taxed more than others. If you don't know this, you will be maybe losing money, but you don't know, because they tax you too much, because they are not the same. Okay, so you should go and study my training. At least you get a large idea about what you will be doing in the future. Okay, let me continue. Loot Strat, you say Djellala is the oracle of Oracle. No, man, I am not the oracle of your YouTube. If I am the oracle of YouTube, I will be having millions of subscribers. I'm not still. Okay, no problem. Steve, what are your thoughts about binary option trading? Hey, Steve, we are not doing binary. We are not doing options in my trading in my channel. The only thing I have options, calls, and puts for beginners. If you are interested, go to my website. Here I will give you my website and try to check this training if you like it. But I am not doing options and binary and the other thing. Okay, so we are doing only stocks. Thank you, Ammar, for the question. Let me continue and answer all the questions because I got too much questions or too many questions. Bikes Night, he said, what happened on Thursday? All my Nasdaq stock drop so low, starting at 12:30. So for me, I don't know what happened but Nasdaq, you know, Nasdaq stocks, all Nasdaq stocks, Thursday, man, Facebook has a gap up and he is in Nasdaq. So why do you say the stocks are? I don't know really what happened, but I understand that Facebook has a gap up, so it has, and it is in Nasdaq. Okay, so check. And Bikes Night, you can send me your stocks and you tell me what's the problem. Like on Thursday, you say Thursday, and I will check. But I am not following. Nasdaq is only an exchange. Okay, so I have no idea what happens. Maybe there is a big sell-off in the mutual funds, or but it will affect all the market. It doesn't affect. I don't know. So check the industries, check the sectors they are in, and see if it's all. If it's all, it means there is maybe a sell-off or there is some problem. So I have no idea. Bikes Night, you can send me an email and we can have a special or a private discussion and we can see why. Because some stocks are going up, some stocks are going down, even in Nasdaq. So it's not all stocks of Nasdaq. So I'm sorry, I don't think that, because Facebook is in Nasdaq and it's going up. Twitter is in New York Exchange and it's going down. So I don't think that Nasdaq or not Nasdaq, maybe. So as I told you, I'm going down and check all the questions. JJ, as I asked you, you can send me a private message and we can speak deeply about this proposition that your friend gives it to you. Steve Gosson, do you wait for a few days after a big spike in price from earnings? No. See, Steve, I have special technique that I use. Okay, and I always speak about this when there is a gap up in the market and what to do in order to buy. Either you can see my subscription or you can see trading level 2. Okay, in order to find the information, I have the information there. Okay, and I can explain it when you are a student, because this is part of my training. I can't give you my training in public. Okay, and then when you get the training either in video and ebooks, or you get my subscription for 1 month, you can study and send me your questions and we can discuss this privately, because this is a question related to a private training information. Thank you very much, Stephen, for this question. Vincent, how did you come up from your criteria and signal to enter a stock? What is it, from a book you read, or? Oh, no. I got it myself, because a book it doesn't teach you how to trade. Most of the books, they don't if you go to see books in swing trading, they bombard you with all these indicators, okay, and you will understand nothing. Before, when I was beginner, I was reading a lot, but I don't find a direct information what to do in each situation, what you do in each situation. How do you buy a stock? For me right now, I have 3 or 4 or 5 entries, different entries. Okay? I have these 4 or 5. Now, in each training you study, you will find one of those. Like, for example, if you get training level 2 or level 3, okay, it's one entry. If you go to another entry from training level 13, how to buy stock from support line, you can get another entry which is this small strategy. Okay, in a few days, like 5 days or 6 days, you find another strategy. So I have many strategies about how to enter. Okay, so I don't get them from books or from people, because all the people, they use technical analysis or they use fundamentals for investing. You don't find someone who is not using using indicators. Okay, and it's very hard because some people, they get a training about indicators, they use them, they lose money, and they don't know what's the solution. So for me, I used indicators before when I was a beginner, but they make me lose money. Okay, so that's why I erase them from my training, and I don't use them, and that's it from the future. No, I see. Binary options is just a new thing, and almost all the beginners go there. They take their money because you will lose. Okay? Because you always put all your money at risk, all your money 100%. This is options for those who don't know what is an option. If you put $10,000 and you buy contracts, if the next day is a bad day or there is a gap down, you lose all your money. It's more to gambling than to trading. Those who use options, okay, they are experienced traders who like to have a big risk, but they have their own strategies. Okay, some they sell options. They don't buy options. They sell because they have, let's say they have thousands of shares in the market, thousands of shares, and they sell their each 100. Let's say each 100 share in a stock is a contract. Okay, let's say he has $100,000. Now he will ask his broker, and he will sell options. He will sell. He will not buying. He is just selling in order to get the premium. Okay, this is what the people do, which means, and they can make a small passive income from that. Okay, if things go well to the stock. Okay, so let's continue with the questions. Oh, where we are. I am sorry. I should go and check where we are. Okay. Loot Strat, another question. Djellala, what do you think on trading crypto? No, I'm sorry. I don't trade something that I don't understand, which is the Bitcoin, or cryptocurrency, or whatever you said. Yes, it could be. You say, do you consider it a penny stock market full of pumps and dumps? I don't go to that market. I don't care. I don't care about what they do there, or or the people are there what to do. So for me, if I ask you what is a Bitcoin, you will never know what is it. It's a new currency that it is virtual. It can be tomorrow, there is nothing, and all the money that it is in the market will disappear. Okay? The stock market will not disappear tomorrow, and all the stocks will disappear. No. You will see companies, except when it get delisted, or when it is like it get delisted, or when there is a bankruptcy of the company. Okay? So Bitcoin is not my thing. So in my channel, I'm not going to speak about something that I don't know and I am not interested in. I am not. I really. Okay? So I'm not going to go into details about something that I don't know. So I have no idea about this. Thank you, Lut, for your question. James, the guy with the numbers, he asks, do you think it's smart to hire a financial advisor? A financial advisor, he is not a trader. He will tell you about risk, as I explained right now. But for me, I give more details about risk than him. Although I am not a financial advisor. Financial advisor is for those who have a lot of money, because he will get commission from you. Okay? And he will get he will put all your money into mutual funds or bonds or whatever. He will make you a portfolio, and then he will follow it. Okay, this is financial advice. It means he gives you about the market, about bonds, about stock market, about other things, and he will show you products, and he will ask you, do you want to buy mutual funds or ETFs or bonds, and he will explain the difference and the risk. But his main thing is that you become a customer for him in order to get a percentage of the money, not of the profit. Because he doesn't guarantee anything about the profit. He will take money from your money. Even even if your money goes up or goes down, he doesn't care. What he cares about is that you become a customer. And this mostly in big banks. Mostly these financial, they work for banks. It means you go to the bank and you will sit with him. You say, hey man, I want to invest for the long run. I say, okay, you want to invest? Here are the types of investment that we have. Tell me what you want to buy and I will tell you the risk. This is what's the job of financial advisor. He just give you what is there as products, and he has a license to sell you these stocks or this. He has a license. It means by the government. He is not anyone. For example, I am not a financial advisor. I can't advise you where to put your money. Okay? For me, I am teaching, which is different from financial advisor. So try to understand very well. And most of the people, financial advisor is when you have money. If you have $10,000, what's this? What does this guy will do for you? You have little money. You can, if he takes some percentage from your money, you will get no money at all in the future. So these financial advisors are used mostly by middle class, those who are lawyers, doctors, and they have each year, let's say, he save, let's say a doctor or a lawyer or something. He saves $100,000 each year or $200,000. He saved this money. So where does this money goes? He will put them in the market. So he doesn't know how to buy or what to do. So he will give them to a bank, financial advisor, and he will help him with this. Okay, so try to understand about this and don't be mistaken. What we are doing here is to trade by yourself. You know the risk by yourself. Okay, you know when it is very risky and when it is not very risky. So you will understand everything about the market in real. Okay, because how these people live, the mutual fund managers, the ETF managers, those financial advisors, from where they live from us. If you buy a mutual fund, you are a customer to them, so they take some money from your money. Okay, so understand that. So always there is a price to pay. Let's continue with other questions. Good, thanks, Steve. Hope the same for you, Steve. Thank you very much, Steve. Oh, Chris Johnson, he sent me, Kareem, can we send you money to trade? No. You should have a hedge fund in order to do so. I am not a hedge fund. Okay? And mostly hedge funds ask for millions of dollars. Like if you have, let's say, 500,000, if you have 1 million, then some people become hedge funds because they get a lot of millions of dollars, and then they can buy and sell whatever they want. Okay? But $2,000, $5,000, $10,000 from a person, it doesn't do nothing in the market, and it is a pain in the ass, as they say. So no, I'm not taking money for the people. I'm teaching people to be independent from me and to do it by themselves. Just for YouTube, he asked me, Kareem, are you full-time trader now, or you still doing other job along the... No, I don't do other job. The only thing I am doing is my full-time as a trader. I don't do that much in swing trading, as you know, and I have explained many times that it doesn't take that much time. And I'm doing my business of teaching. This is the only two things I'm doing. And in the future, I will have maybe more businesses. I don't know. So when you have money, when you begin to have money, you will see opportunities in the market or outside the market. People, they do real estate. People, they do other kind of businesses in order to diversify your business, because all the people who they begin to have money, they will begin to diversify. You see it in everybody. Even people who have no idea, they will begin to buy land, to buy real estate, to buy other things. And I am not an exception. Vincent said to Bikes Night, rumors that the big guys got an early report. See, Vincent, we are not doing rumors and the news and other stuff because if you follow them, you will get tired. And you think you can make money from knowing some information. You can't. Because whatever happened is a secret. You will never know, and it is not public information. So stop searching for information and you think that this information can make you money because you know them. Most of the losers are those who watch TV. CNN, CNBC, and the other stuff, analysts. Most of the losers, because they believe that other people know good things and they give them for free. There is no free thing in the market. There is no free lunch at the market. I have said many times, but a lot of people, they don't believe. So just for YouTube, ask Chris Johnson, send the money. Yes, it's very good. Send him the money. All the people likes the money. Facebook gapped up, but when it was coming down in the day or two. Okay, so it depends on you. If you want to sell, as I do before, even before the market opens, I can sell. But I wasn't there in Facebook this time. So you don't wait too much, because sometimes the price will go down and you will lose. You will lose what you have won before. The big boys got the earning before anyone. Oh, no. Vincent, try not to say something that it is wrong. You said that the big boys got the earning before anyone else. No, it is not. This, if someone gets information before the others, this is punished by the law. There is no, it doesn't exist. So stop saying that that some people know before, because the company earnings, you can listen to them. Yeah, if you go to Yahoo earning calendar, and you can subscribe, and you can listen when the guys, let's say they say at 6 p.m. they will get the news. All the people are listening at 6 p.m. There is no someone who knows before. No, this is wrong, Vincent. So it's not that. No, Bikes Night. I just told Vincent that he is wrong. There is no one who knows information before the public. If you know something before the public and you get secret information, you will be punished by the law. So it is illegal. It was before 1935. Before, there are some illegal things happening. But in 1934 or 35, when we have this the SEC.gov, when we have the government agency, the securities agency, it was banned from trading or investing. It was banned to get information. So please stop following analysts or stop following the news and you think that other people know better. No. Okay? So there is no. Oh, Steve Gosson, you said I have most of your videos. I just missed it somewhere. Please, Steve Gosson, please send me an email and ask me a direct question. I will answer you. It's better. Okay, here my email and my website. My email. Just send me an email and explain. I will explain it to you again, because see, when I'm explaining here, I try to give you my general opinions about the market, but I am not going to give you details about my training. Even if you are my student, I will not give it here, because here it is public. Anyone can come and can watch me and listen to me. So I will not give him my training for free. So this is, you should understand. So if you have a question, any one of you guys, if you have a question, specific question about the training, you should send me an email, and I would be happy to answer it later after the live stream. Okay, let's see. There is a lot of things written here, so please wait for me until I just got to Vincent, stop saying false information. Stop saying false information. You said that the big boys saw the bad earnings before anyone else. No, stop saying this here, please. And you think that there are other people who know the market, who get secretive information. Please stop saying this. There is no. It's not true. Yes, JJ. Yes, these are called seminars, but I haven't done one yet. Okay, it might be in the future, but not now. Yes, which is a very good idea to do seminars and to teach students It means person by person. Yes, it's a good idea. I will take it, but it's not now. Shamaka, how are you, Shamaka? Let's see the other questions. Numbers says, thank you for answering my questions about the financial advisor, Kareem, but I think you would make a good financial advisor. Yes, thank you very much for this. But understand, financial advisors, and there are a lot of jobs, brokers, that are under the table jobs, that you get these jobs because you know someone or you know friends, because it is about money. Do you know that a broker can get $120,000 a year? So it's a big money. So it is not someone who is just someone stranger and he will ask you to be with him to get this 120,000. No. It could be brother or sister or father or mother or close friends. It could be like this, but it couldn't be like you are in the street and someone asks you to get $120,000 a year. It's just because he saw you. Okay, no. So make sure to understand this. Hey, Savage, you bleach, you right. Hey, welcome, you right. Intelligence is the ability to adapt to change. Yes, this is true. This is true. Trading is just to adapt to new situations and you know what to do. That's trading. Thank you very much for the information. But you write it in a way with numbers. Okay, Joey Alfio, he has a question. He said, Djellala, what do you think of dividend? Yes, I just explained dividend in the beginning of this session when someone asks about value investing. Understand that dividend is cut from the price. It is not something from the company. It is not a paycheck from the company. It is from the stock itself. Make the difference. So in order to understand, if you really want to understand the dividend, the stocks that give dividend and the stocks that doesn't give dividend, please go to my training, which is level 16. Now this which is called how to invest in dividend stocks. If you go there, you find videos, or you can find ebooks, and you can study this. It will give you almost all the information that you need if you want to be an investor in the future using dividend. Or even if you don't want to use dividend, it will show you. Okay? So, dividend, you should have money. Okay? I will give you an example to make you understand. If you have $10,000 and you invest it for 1 year, it gives you 5%. How much you get in the year? You get $500. This is what you get. Okay? So you should have money. And in order to understand that sometimes there are stocks that get taxed more than the others, you should understand all this. So what you should do, you should go to my training, you study it, and it will give you all the information about dividend, about all the information, how to get them and when, and the declaration date, the X date, and all the information. And it is so clear and so simple. All my strategies are there. All my training are very simple. Thank you, Joey. And please, Joey, see at the end of the chat, you will find my email and my website. You go there and you check. If you don't understand something, you just send me an email. I will explain. Now, another question. Yes, Vincent said, who are rich have multiple stream of passive incomes from their businesses, real estate, stocks. Yes. whenever you have money, you begin to see elsewhere, because you will put it in something that it is static more, like real estate, like housing, like land, like anything else that it is a piece of money, an asset, as they say. And whenever you need money, you can sell it. So it's always there, like land, like real estate, like renting properties, like it's a lot of stuff. Thank you very much for asking. There is another question. Djellala, are you Egyptian? Joey, no, I am not Egyptian. I am Algerian. Okay, there are a lot of questions, man. Yes, thank you, Ervin, for giving the information. Algerian, double nationality. It means I'm American also. Oh, just for YouTube, said Kareem, do you do after hour pre-market trading? Oh no, sometimes before the market opens, when there is a gap up, I sell. When I see a lot of money, I sell. Even before the market opens, I sell. This is the pre-market information. But I don't really trade. I just sell. Because if I want to buy, why should I buy before the market opens? The bid and the ask will be wide, so it's not a good idea to buy. But I will sell. Yes, I will sell. Let's see. How do you trade gaps in the market? Prodigy one. No. For me, I don't go to stocks and find those that do gap up and gap down, and I buy them. Okay? No, for me, I just buy when they get a signal. It might be a few days after the gap up, or it could be 1 week or 2 or 3 or 6. I don't know. For me, I buy by signal. I don't buy because of the news. Okay? So I buy because I get a signal before. That's why I buy stocks. And then if there is an earning date, I will stay. It doesn't matter for me because I am with the risk. Okay? But I don't go to stocks the day before they gap up and I buy them. No, I don't do that. Mostly I don't do that. Okay? So I buy only with my thing. Another question. No. Excuse me. I'm having a question from Joey. He said, so are you saying that someone like George Soros doesn't have the information ahead of time? No, he doesn't. If he knows something about a mutual fund or something, if he knows, all his actions will be illegal and he will have problems with securities. No. Try not to see. That's why some people, they begin to talk like this. They don't understand what's going on in the market. The market is, no one is knowing what the other is doing. Okay? That's because the market is fair. You just go trade according to your opinion. Why someone is selling stocks, selling his shares, and you are buying? Why? It's just because different opinions. So George Soros or anyone else, he has no information about. No, he has information about what he sees in the market, but he has no information about inside trading. No, this is inside trading and it's illegal. Okay? Don't tell me I know that Facebook will gap up. You don't know. You predict. Now, but understand that George Soros and the other guys, they have big money. They trade for hundreds of millions. It could be billions. So he made a large trades. Okay, he doesn't make small trades, and the money, it is not. He is a hedge fund, so the money, it belongs to other people also, so because it is a big money, and he can lose also. Okay. Let's see with other questions. Yes, if someone cheated, he will be caught, because you can't cheat. If you get information, they will follow you, and you will have problems. It doesn't happen. They know all the people who have big money. They don't risk their money with the government or with things. That's why the market is about, some people, they follow news, some people, they follow what the people say, and they get just an idea what will happen in the future, and they act on this. For example, if I say to you, oh, Facebook is a good company and it has good and solid balance statement, that's why I invest in it. No, this is my opinion. My opinion, it means this is what I think that the company will do. It will become bigger and bigger and bigger. This is what I think. That's why I act on my thinking. So this is speculation. You speculate things. Okay, you think that someone is buying or you see that they say that they are buying a lot of silver or a lot of gold or something, and you think that the price will be going up, so you buy silver and gold because you act on the information that you get. But for me, I am not using the information of the people. I'm using the price. The price doesn't lie. The people lie. Try to understand what I say. Try to make every time you think about what you want to buy, understand what I say. People lie. Okay? When you go online, people, they lie. Mostly they lie. But when you see the price, when you see Facebook, it's $174. It is $174. It is not something else. The price doesn't lie. It's always what you see is what you get. Let's see some other questions. Okay, thank you very much. I think I have answered all the questions. For those who have written a question, I don't see it. Please ask me again. Okay, so as I told you before, welcome Joey for asking these questions, and all the guys who ask questions, which is very good, because the more you ask questions, the more I give you information. At the exception of my training, which is very specific and very direct. Whenever you go to my training, you find all the information into details and what you should do, what you shouldn't do. And if you have more questions, just ask. Our subject today is about risk, and whenever you buy something, before you buy, you should know how much you should lose if the stock is going down. This is what we mean by risk in stocks. So Jouet, he has a question. He says, so far as a beginner, what should I invest in other than dividend? Okay, first you should make a plan. Are you investing or are you trading? Now what I teach is trading or swing trading, which we follow trends in the market. So we are not investing. Investing, you should know about the company fundamentals. You should know what is this company, what it does, what's the competition, what's the earning, is it good each year after year. You should all see all the investing criteria. You can find books. You can find okay. You can find books. You can find online information, and you can study in order how to buy a company when you are investing. Okay? Dividend that has dividend or it has no dividend is the same thing. They are different, but it is the same thing. Let's say, for example, Apple, it gives dividend, but Facebook doesn't give dividend. But you can invest in both of them. Okay, that's why I told you, Joey, you should go to training level 16, how to invest in dividend or non-dividend stocks. You get this training. It will explain everything you want to need for your future if you want just to do investing. But here in my channel, what I'm explaining is swing trading. It means just you trade, you buy, you stay, you hold the stock for many days, many weeks, or many months, and then you sell. So we are not staying many years, 1 year or 2 or 3, okay? Just for trade. Hey Karim, are your strategies effective for day trading too? Yes, I teach day trading very simple information. You can go to 12, training level 12, how to day trade using candlesticks and the chart, and you will find some techniques how to trade in the morning or at any time of the day. So if you are interested, you can go and check those techniques and do whatever. Yes, thank you very much, just for YouTube. For me, I switched from day trading to swing trading. It's just because it is easier. Okay, it's easier to just have half an hour, search for stocks, put them in the chart, choose 1 or 2 and buy, and then close your account when you put stop loss. It's easier than to go in the morning at 7 o'clock or 6 and you begin finding news, finding information, what happened to the day, is it a good day, is it a bad day, and then at 9:30 you begin to fight, where is the direction, is it going up or is it going down? You will have to compete with others each time. So it will be stressful. It will be a lot of work. That's why for me, I don't want to do that. That's why I don't do that. So, empty mind, you say, why discount 5% in IPO for retail investors? So, where did you see this information? 5% in IPO. Where did you see this information? Is it after the IPO got listed or is it before? And I don't know which stock are you speaking about. So you should, if it is something private, you can send me an email and we can discuss this. If it is just a general information, you can give more information, empty mind. Okay? You should give me more information, or you can send me an email and we can discuss this, because I don't know which IPO, and is it before it was in the market or it is after, because after there is no discount. What is this discount they have? So empty mind, if this information is like a private information, you can send me an email. If it is a public information or you find it online, you can send me the link and then I will read it and will tell you what is it about. Because most of the time, when the stock is in the stock market, there is no discount. The price that you see is the price that you get. This is what I know in the common stocks in the stock market. Okay? So, as I told you before, how much risk is a big deal? Okay? Now, when I say risk, it's not obligatory we are speaking about stop loss. So, a lot of people, they don't understand. They think that when I say stop loss mean risk. No, there are other things. Oh, in Indian stock market? Yes, but uh, is it out of the market or is it in the market? Prodigy one. If I wanted to buy 500 shares in a company, what's the best way of putting in this order without making the market move up? Now, Prodigy, if you have, the volume should be so high. And if it is a lot of money, 500,000 shares, you are speaking about millions of dollars. I don't know if you are just playing with this or why you ask about 500,000 shares. What is the stock price? Okay? 500,000 shares, it depends on the stock, how much is the stock and how much the volume. And you can check that. Okay? You can check that. You should see the volume of the stock and the stock price. Because if I don't have this information, I will never tell you. So another question. How do you hide such a large order, or do you spread out over time? Oh, okay. Hey, Prodigy, as I told you, it depends on the volume of the stock and the price of the stock. But I think 500,000 will move the market. It's a big deal. It's a big deal. So Prodigy, you should you should see the volume, as I told you, and the price. You can, Prodigy, if it is private, you can send me a private message and we can discuss about this. Oh, it's 89. And what is the volume? The volume that you see, daily volume, how much is it? So Prodigy, you give me the price, you should give me the daily volume. How much is it? I have another question. I will be waiting for Prodigy in order to give me the full information. For empty mind, you say in IPO listing price. Yes. I have no idea, but because they should know the company itself and the price they give before the IPO get listed. It will be so different from the IPO when it begins trading. Try to be careful, okay? And this is a big trade, big investment trade, and try to see the rules in your try to see the rules in your IPO, because if you buy before, if you empty mind, this is in America here, if you buy before the company get listed, it means you are buying shares by private. What does it mean? There are rules. When this company goes public, they will not let you sell in 6 months here in America. 6 months. So try to see what are the rules in your country and ask questions before you buy. Whatever discount they give, it's not important, because before the market opens for the IPO, before it gets listed, And after it becomes an IPO, there is a big change, either up or down. Okay, so you should understand, for example, what are the rules if you buy in private. Maybe it is a bad investment, a bad company, and they are losing a lot of money. And you put your money, let's say you put $1 for each share. But when the market opens, it opens at 50 cents. What you should do? And 50 cents is going down, going down, going down until 6 months, and then it is 2 cents. So all your money will go. So empty mind. If you are from India, you should ask those who are selling what are the rules of the market. If the price after the stock market opens in the public, what is the rule? Can you sell, yes or no? And you should know this company. Okay, you should know this company. You shouldn't just invest in a company that you don't know just because they said to you 5% discount. Okay. If you want to go to buy a car which is damaged and they say you a 5% discount, this doesn't mean nothing because the car is damaged. Okay, so what do you mean, Prodigy? You say 250,000. It means 250,000, just this? Oh, no, no. The price will go up a lot. Will go up a lot because 250,000, 250K, it's not even 1 million. And the stock is small. If you are buying this 500,000 shares, it means that you make a spike. It means the stock will go up from maybe 98, it goes to $1, $1.50. So those people who buy low, they will make money, and you will not make money because you make the stock go up, and you can't buy by the same price. That's why your order is big. And I don't know why you are buying it means $500,000. Well, not to $500,000. Yes, you are buying like $480,000 in one stock. Okay, it's a big risky trade, and $500,000 is too much money. So try to think a lot about doing some stupid things in the market, because all your money can go, or someone big, he has 20 million or 50 million, he go and short the stock, and you will lose all your money in one day. So be careful of this kind of Prodigy. Try to calculate a lot what you are doing and why you want to put all this money into a small stock. If someone tells you that this stock will be going to $10 or $15 or $20 in the future, understand that he is a liar, because no one will know the future. If there is like a scam or pump and dump coming, okay, so I'm telling you, it's a lot of money, and you should think about this before you do any trade. Okay, here we have a question from Wise Man. He said, if someone buys like 50,000 shares of a stock like Facebook, for example, does a stop loss still protect you? What does a stop loss do with this protect you? Stop loss, when you reach the stop loss price, your shares will be sold, either 50,000 or 10 shares or 1 share or 20,000 or 100,000. It will be sold. That's it. So the more you have money, understand that when the stop loss, you will not get the same price. Okay? The stock goes down according to the amount sold. So it might be going down for a few cents or $1 or $2. I have no idea. It depends on the market. Yes, Prodigy, you say it's a slow stock, doesn't move that much. Yes, but how do you get this idea to buy 500? It means $500,000. You put it in a stock. Okay, this is a big deal. Okay, so try. No, what do you say? Say the company are research. I went there, and some of that they put out a lease for a new building. They are hiring more employees. But what's this do with your trade? I told you always try to separate your trade from the company. You are taking information from the online and try to make money from that. This is not what I teach. Okay, this is not what I teach. What I teach is to get a signal, and you follow a signal, and if the stock move, you buy. But you are following leasing and employees, and a mutual fund doesn't look at the employees or lease. It doesn't do that. Okay, so understand what you are doing. Are you doing investing for the long run? You know that this company is good and you have a good strong fundamentals, and you want to invest for 5 years or 10 years, it might be. But if you are doing a trade, what makes you buy? Does a company that has a nice girl or a nice executive or a nice CEO makes the difference for stocks? It doesn't make a difference. So there must be more money, right? Where is the money that you are looking? The stock is different from the company, so don't link them. Now, if you link the company with the stock, you are making a big mistake. I'm telling you from now. Okay? So Prodigy, try to think well about what you are going to do. Okay? Are you doing a trade or are you doing an investment? If it is an investment, okay, you can divide what you want to buy in a few days or few weeks and buy each time little. Don't buy too much, because if you put 500,000 shares at one time, the stock will go up so quick. Okay? So you will move the market, because you will be a mover of the market, like a hedge fund, or because you are spending millions of dollars in this trade. Okay, you are putting double what all the people put. If the other people put 250,000 and you are putting 500,000, it means that you are putting double what all the people do. So there should be a price moving up and up and up. It should be, as my opinion. But since we are doing a risk, always, your main question, Prodigy, is that your money, will it be moving the market? Yes or no? Yes, it will be. So from 89, I don't know where the stock will go, because other people, when they see the stock moving up, they will buy also. So you will buy more and more and more and more, higher and higher and higher, more expensive. And when you stop, some people become to sell, and you might lose some money at the beginning. But in the future, how the market will be for this stock, no one knows. So I don't know if you are doing just what we call swing trading, or you are doing investing for the long run because you know the company. Okay, you went there for this company, put out a lease. I don't know this information that you are telling me. So since we are talking always about risk, I say to you, most of the time when we speak about risk, people, they think about the stop loss, which is wrong. Stop loss is just part of the risk. Okay, it is just one we use in order to calculate the risk. But the risk, let's say when you invest money for the long run, for many years, you don't use a stop loss. Okay? So your investment, you can lose a lot and you can make a lot of money also. But you should wait many years in order to see this result, either good or bad. You should see that. So the risk is so good. So wise men said stop loss doesn't protect someone that has... No, it has nothing to do with protecting. It has to do with when you sell or when you buy. The amount is big and the volume is small, so it will make an impact on the stock. Prodigy 1, is thinking to buy stocks without getting known, without making the stock go big and big and big in the same day when he puts a market, because you can't put what we call you can't put a limit order to buy 500 shares, 500,000 shares. You can't. So you should put a market order. When you put a market order and the volume is small, the people who want to buy from you, there are few. Okay? So the demand, there is not a lot of demand. So if you want to buy, it will be very difficult. That's why the stock will be going up. And you will never. So the main good thing is you can buy into many weeks. Each day, for example, you buy 10,000 or 20,000 shares. That's it. You shouldn't buy 100 or 200 because you will make the stock go up and all the people will see it. Okay? Because the volume is so low. Joey has a question. With 15,000 saved up, what do you suggest to do with it first in terms of investing? Now, you should first understand what is investing, and are you or will you be an investor, yes or no? You should be okay with the risk. I will tell you something very important. Let's say you buy stocks, you buy companies that you know, 2 or 3 or 4 or 5. Let's say we have a bad year like 2008, and most of the stocks lose 50%. You have 15,000. Are you okay to lose 50%? Just an example. If you say, no, I'm not going to do that, so you are not really an investor. You don't want to have the risk. Okay? So it's up to you what you want to do. But in investing, you should understand what is investing, because it is the long run. You should keep for 5 years, 10 years, 20 years, 30 years. You can change the stocks, yes, but you should keep them for the long run. Okay? And you should know about investing. What is diversification? Why should I buy I shouldn't buy, for example, the same stocks, the same industry. Because when this industry goes down, all your stocks go down. But when you spread them into many sectors and you choose good companies, good stocks, you should know this stock that you are investing in. Okay? So this is what I'm telling you. You should first learn about what you want to do, and then you can make a plan, and then you can begin your investing in whatever you want to invest. Now, for me, I'm not doing investing per se. We are doing here just buying and selling according to trend. So you have, if you like buying and living for many years, you should do investing that way. But you should know what is investing and what it carries as a risk, what is dividend stocks, and what are these not dividend stocks like Facebook, why they don't give the dividend, all this information, and about tax. There are some stocks that are taxed more than others. So you should know, if you are here in the USA, you should know these stocks, and you should at least know what are they. Don't do mistakes like this, because if you do a mistake, it will be very bad for you. So Joey, the first thing you do is maybe you should take a training or two. At least you understand how things work. And then when you get a clear idea what you want to do, if you want to do, for example, investing, try to check so what's more risky, buying and selling? No. All they have risk. But all they have risk, it depends where you are. It depends where you are. For example, you want to invest in Twitter. Let's say you buy the stock at 74 like 2 years ago. And now it is $15. So it is risky because you risk all your money. Let's say you buy another stock, Facebook, and it was going up. And now you make money. So it depends on where you are. Okay? Investing or swing trading or day trading, all they have risk. But investing, it has more risk if you are wrong. Because you will lose a lot, because you will be waiting for your stocks to go up and they don't go up. So you will be losing more and more and more money. But swing trading, what we do is that when we are wrong, the next day or 2 days, we have stop loss and we exit the trade and we buy another stock. So we are not looking for the company fundamentals. We are just looking for the stock, how it behaves. So we have a signal. We have a criteria to be met. This is what I teach as a swing trading. We should use a stop loss. Whenever the stock is going down, it's not good, we exit. We buy another one. But in investing, it's not you buy a stock today, next day you will sell it because it goes down for 5 cents or 10 cents. So you should stay 1 year, 2 years, or 5 years, or 10 years in order to see these companies are doing good or bad. Okay? So Joey, you should first understand which style is good for you. Is it investing for the long run, which is good for you and you don't care that much, you just buy stocks and you leave them? You can do investing. Now, if you do swing trading, you should buy the stock, buy the signal, criteria, and then you follow them next day and you put stop loss. If the stock is going up, you will be making money right now, just in the next day. So you see the difference? In investing, you should wait at least 1 year to see the results. Are you making money, or yes or no? Because the stock can go up and down, up and down, up and down, until the end of the year you see what it does. But in swing trading, we know directly if it is making money, yes or no. Thank you, Joey. I want just to I want just to make you aware about the whole picture about investing and swing trading. Swing trading is you are a trader. You are not an investor. Investor, you should know the company that you are investing in and you compare it with the other companies that do the same job. Let's say you want to do, for example, retail. We have Walmart, we have Costco, we have Whole Foods, we have Target, we have what is it, Sears. We have a lot of companies. Now you should go and try to compare them. Which is the best and which is making the most money and which is the stock is going up? Which one? And which is the strongest in the market? Okay? So this is kind of search that you should do by yourself. No one will give you information about this because you should rely on your intelligence to find what is good for you. And you will be responsible. If you lose money, it's you who have chosen. If you make money, it is you also. So you should make your own decisions. Okay? Thank you, Joey, Alfio, for all this information, for all these questions. But as they say, in general, power is knowledge. When you know about trading or about investing, you will do good choices always. And you are with risk. It means this money that you have, you should risk this money in order to make money. If you don't want to risk, you should not be in the stock market. You should go to some other place, some other businesses to do, not stock market. Stock markets, all the people who are here, stock market, they risk their money. They know they can lose some money. So that's why they are here. But they can make a lot of money also. Okay? See, for example, Facebook, it was $17.55 in 2012. After 5 years, it is, let's say, $175. Okay? $175. You are getting how many? You are getting nearly 700% of your money. If you put 10,000, it could be $70,000 in 5 years. And this is a good investment if you are right. But if you are wrong, you put $10,000 in Twitter 2 years or 3 years ago, and now you have, let's say $2,000. You lost $8,000 from Twitter. So it depends where you are in the market. Okay, so try to study, try to read books. If you want direct things, you go to my training and you get all the information very quick. If you want to spend many years studying or reading, it's your option. You do whatever you want. Prodigy, do you believe in 2020 Bitcoin will be worth 8,000 shares? Okay, Prodigy, I am not into Bitcoin and I will not do Bitcoin, and I am only in stocks because I know what is the stocks are. If you know what is Bitcoin, you will tell me later. Okay? Bitcoin is something which is virtual. As it goes to 8,000, it can go to $1 one day without notice. You will never know who are these people. You will never know nothing because it is a hidden thing. But stock market, if you buy 100 shares of Facebook, you know Facebook and you know the company and you know what you are buying. So you see, they understand? And it is regulated. It means you know that this information from the companies, they give you information to read about the company. But Bitcoin, you are not getting any information. You are getting just the price. Okay? So the price can change at any time, so we don't know. So please, Prodigy, we are not doing Bitcoin here, so I have seen some questions before, but I can't answer because I don't know a lot about Bitcoin. Thank you very much. thank you. Just for YouTube, you are going to sleep or something like that. Thank you, just for YouTube, and good night. Joey, yes, you are right. I need more information. Yes, you need more information because it has risk. Okay? If you don't know the risk, it's like when you go to the army and you are going to a war. You should know the risk that maybe you die. So this is one part of the risk, that you are going to die. So you should make sure you understand before you you go to the army and then they send you to some place where there is a war. Hello, Minyapan. Thank you very much for coming. It's a long time I haven't seen you. I always see you on Facebook, but not here. So as I told you, risk. You should have an idea, and you should see the whole picture, what you are doing. Some people, I don't know, some people, they begin like swing traders, and maybe they lose money, they don't put stop loss, and they say, okay, I will be an investor, I will leave this stock because it was going down, I will leave it for 2 years or 3 and see what will happen. Now, what do you think will happen? If your stock is going down, maybe the company is losing money, so mutual funds are selling this company, and you are staying. After 1 year or 2, you lose 20, 30, 50% of your money, and the company maybe it go bankrupt. So at least you should have an idea about the company, and don't play too much with investing if you don't know what is investing. Okay? Investing has a big risk of losing a lot of money because you don't exit very quickly. Okay? You say, I am with the company. Yes, it's going down, the price, but I should wait. Yes, because you are invested and you should wait until the end if you are right or you are wrong. But sometimes you stay too much and you lose 40% or 50% of money, and understand that it is a big deal. That's why some people, what they do, they invest in many companies and different, not in the same industry or the same sector. Okay? Don't go, for example, and buy Facebook and buy Twitter. Okay? You can buy, for example, Apple, you can buy Facebook. Why? Because they are different. Apple has to do with computers and smartphones and the other stuff, other technologies, and Facebook is social media. So you see the difference. And how do they make the money are different. Apple is selling a product. Facebook is not selling. It is based on ads business. Okay? So at least you should understand. When I'm saying investing, you should understand what these companies are doing, what is the competition between these companies in the same industry. You should have an idea about them. That's the thing that I am always saying and speaking. So there are millions of people who succeed in investing. When some they succeed and some they go bankrupt because they buy some companies 10 years or 20 years ago, and these companies are not doing that good, and they stay with them. Now, some other people now, what they do, in order not to have this trouble, they buy mutual funds. Or you can buy ETFs. ETFs, it is just exchange traded fund. It is just something that tracks an index. Okay? It has all the average of all the stocks that it belongs to. For example, let's say you like Dow Jones. index which has 30 stocks. Okay, so you like it, you go to the ETF and you buy it. You buy just the index. You don't do whatever the index is doing, the stock will be doing, which is an ETF. Okay, let's say the Dow Jones index and its ETF is DJIA. So if you buy that ETF, which is like a stock, whatever the index is doing, the ETF will be doing. You can buy also the whole market. You can buy some mutual funds who they change the stocks. So it's not the same stocks for mutual funds. They are not. ETFs, mostly they are the same stocks. But mutual fund, there is a manager. This manager buys and sells each year some stocks. He will sell some stocks, he will buy some stocks. And if he is good at selecting stocks, the mutual fund index, it will be going up, so you make money. Okay, it will be making money. But if this manager mistakes and gets wrong, the stocks go down, so you lose money. But what about him? No, he will not lose money because he is not taking risk. It's you who take risk. So always try to understand this thing. Okay, that taking risk is the person himself, but not the bank or the broker or the mutual fund. Okay, so you take risk. They don't. Their business is based not to do risk, not to do risky trades. Okay, so hope what I tell you today about risk and answering the questions will get benefit for you. Now, if you have, let's say, more questions, please ask. We are nearly 2 hours right now for our live stream. So if you have more questions, please ask. And I can continue right now speaking about risk. Now, even if you are trading, you can divide your account into many positions. At least you minimize risk. Okay? Because if you use all your money in one stock, it will be a real problem because you get more risk. Now, you can get more money, but understand that the risk is big. And this is the market. You risk more, you can get more. But some kind of risk is a lot of bad. Like when you, for example, when you buy options or something, it is too bad because whenever you get a bad day, you will lose a lot of money that you will never expect to lose. And this is why I told you that you should know what you are doing. And my strategies, when you are doing swing trading or you are doing investing, it shows you how much risk you are taking in this trade. Okay? Now, someone, when he speaks about risk, he told me, what about profit? A profit, no one knows how much profit. So you should concentrate on your risk and leave the profits for the future, because the future you will never know what will happen. You will never know how much profit you will get. But for the risk, you should have clear idea. Okay, you should have a clear idea before you do any trade. That's why for me, I always put stop loss in order to protect my money from losing more than I expected. Okay, if I want to lose certain kind of money, certain amount, I don't want to lose more. That's why I put stop loss. I don't want, because if I lose more and more and more, by the end of the year, you will not make money from the market. Okay, so understand always that knowing your risk is knowing a lot in the stock market. And the more you trade, the more you get this idea about risk. If you take my strategies, but if you just trade without knowing your risk, you will be losing without knowing why are you losing. What's the thing that makes you lose? Is it when you buy? Is it the stop loss? Is it want to follow the stock? There are a lot of things. Okay, so in my strategies, most of the time, I'm speaking about everything that beginners can ask as a question. Whatever question you ask, you will find answer in my strategies. If you don't find or you get problem, you can just send me here my email and my website, and you can just ask me any question about the training or about something else, and I will answer you. Hi, Muhammad Benaba, how are you? You come late. We are at the end of this session. It's 2 hours right now. Try to come earlier next time. So, as I told you, risk in day trading or swing trading or in investing, the more you stay long, the more you get risk more. And all is not about mainly about time, but it is about direction. Let's say you buy a stock and it's going up, and the more you stay, the more you make money. But this is good. But what if you buy the stock and it's going down, and the more you stay, and the more you lose money? So which one do you prefer? I know you prefer that the stock will be going up and making money, but sometimes when you buy a stock, it goes down. So what will you do? What is the solution for your problem? So you should know the solution before you buy the stock. You should have the solution is to put a stop loss, is to know where you exit for sure. Okay, so stop loss is done after you buy immediately. That's why for my free training about the chart and candlestick, what I do is I always put a green line is where I buy. It means the price where I buy. I put a green line on the chart. I put a red line for stop loss. Okay, it's always in all my trade I should put them if I am swing trading. Okay, because I should know where is the stock. Am I making money? Yes or no? Or am I losing money? It's very, very important to know this information. Okay? But before you get to this information, you should know where you bought and where is your stop loss, which is the risk that you take in this thing. This is in swing trading. Now, if you are investing into a company, there is no stop loss, and you should know about this company, competition, the earning dates, the earning profits that the company get, the debts, if the company has a lot of debts. It's a lot of stuff like this. So many ask a question: can you please upload more videos for some other stocks which you are currently in? I know you have uploaded for one stock and explaining to us. If you do it for other stocks, yes, I will. I'm in some stocks. I will do them, and I will explain the steps bit by bit. Yes, I will do that in the future if God wills. Into the subscription only. Okay, it will be only in the subscription. I will not put these videos into a training, into other kind of training, because I put one stock into training level 7. How to follow an uptrend. Now I will finish that. When I finish that, I will go to my subscription. If I have other stocks that I will put it there in the subscription. No, see, Japan, I don't use patterns. Understand that. Listen, Japan, if you go to training level 7, how to follow an uptrend, I am not following patterns in the market. I am following techniques. These techniques, when you study them, you do with any stock that you like. They don't apply only on one stock. It applies on all the stocks. So for you, if I put another stock in the future, it will be so different from this one. But the techniques are the same. Okay? Thank you very much, Minyapan. Thank you very much for your subscription. Now there is only one subscription, and all the training are just training levels. They are not subscription. But thank you very much. But in the future, I will put everything into the subscription. Just a way to show how things work in the market and how you deal with these stocks. Okay, and how to get more of the profits from any stock, because sometimes some people they get profits but they lose them later after 1 month or 2 or 3. They stay too long, they don't know how to exit, and they don't exit at all, and they lose all their money they get. So in my techniques that I use in 7, training level 7, it will show you how to follow the stock for real. With techniques, and it could be any stock. Yes, yes. No, I understand you. You mean resistance line, support line, and the other stuff. But I'm telling you, each stock does a pattern when it moves. So the stocks doesn't move the same. So each stock has a new pattern. Now, what I'm saying to you is that the techniques shows you how to look at the chart and how to make a decision. Because we take a decision when we see a new information. For me, I'm not going to change the stop loss until I see a new information from the stock itself. Okay? If there is no information, I would not. Yes, and Minyapan, I understand what you say, and I told you in the future I will upload more videos to check, and they will be different from that one. Okay, that one is totally different from the other, and each stock is different from the other. Okay. So as I'm explaining the risk, there is another kind of risk that we are speaking about right now, is the risk of not taking your profits from the stock. Thank you and welcome, Minyapan. Thank you for your questions. Sometimes some people they buy a stock, they see a lot of money, the stock is going good, and one time there is a gap down, or there is a big selling off, and they don't put stop loss, and they don't know how to follow the stock, and they lose everything. And some people they stay and they stay many months, and then the stock will go down and they lose everything, and maybe they lose all some of their money, although before they were winners and they have a lot of profits. But I'm telling you, those people, as I always explain for beginners, when the second day they see some money and they exit early, this is a big problem. And I have explained it in some of my videos. This is a psychological problem. You are always scared about the market, so you can't trade when you are scared. You will do mistakes. It's the same when you are, for example, doing a driving test. Okay? If you are scared, you will do mistakes, and you will lose, and you will fail to get your driving license. That's why it's like trading. Trading, you should be free from getting scared of the market. You trade and you know that there is risk, and if you lose money, you will say, okay, I have made a trade, I lost money, I will do another trade and I might make money. This is how the people continue to trade, because not all your trades will be winners, not all your trades will be losers, so you will have always good and bad trades. And with a good command of risk, if you follow, for example, training level 5, which is how to make money from stocks, you will understand how you can make money from the stocks, the general idea or the general concept. Okay? So this is all for today about risk. I have answered a lot of questions, and I am very happy that all of you guys are here. Most of the guys that I know are here each time. And please, if you have more questions, ask me now, because we are at the end of this session. And I hope to get more questions. If all of you guys have asked questions and you don't have nothing to say, so I will be closing this session. We have 2 hours 11 minutes, which is very good, 2 hours. And I have tried to help as much as I can. For those who are having questions or something, you can send me an email or check my website, which is always very good. And if you have a private message or something, you should always ask me private message, and don't wait until I get to this session. Okay? So I will be waiting for a few 1 minute or two. If there is no question, well, I will be seeing you next Saturday, if God wills. I will check to make more videos for my live trade that I have done, and I will add more videos in the future. And good night, wise men. Thank you very much for being here, for asking more questions. Thank you. And whenever there is something very important, I will make videos about it. And I will be making whiteboard lessons, because a lot of people, they ask me about this. Expect to see in 1 week or 2 or 3, you begin to see those kind of lessons that I will do on the whiteboard. Okay? So if there is nothing to be asked, I will be closing this session. Thank you very much, and see you next week. Thank you very much.